Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Today, we're going to be actually focusing on financial wellness, and who we have on the show today is we actually have Jay Martin. So for those of you that don't know Jay, Jay's a well-known CEO of the Cambridge House International, where he puts on a lot of conferences around the world, especially for tech as well as natural resources. So Jay's pretty experienced, and he claims in a lot of his shows that he brings on the best of the best leaders to kind of learn from them, as well as share some of their learnings with all investors. So whether you are new to investing and you're trying to learn more a little bit about it, in this podcast, you're going to get a little bit more of a feel of investing, and then also learning a little bit about Jay and kind of his background and kind of what he has learned over the last decade. So Jay, it's good to have you on the show today. If we could just start off, if you could just tell us a little bit about yourself.
Yeah, 100%, Ben. Thanks for having me on. I'm excited to chat. I'm looking forward to this. So my name is Jay Martin. I live on the west coast of Canada in a little town called Squamish, just outside of Vancouver, BC. And I'm an investor. I manage a portfolio of my own cash, and I run a YouTube channel where I interview a lot of the greats who I consider to be the greats in the small cap finance sector. So my wheelhouse is early stage investment. That's where I focus. That's my pocket. And I'm a very people driven investor, meaning that I emphasize the captain of the ship over anything else when I'm looking at an opportunity. And as a consequence of that, I run a YouTube channel where I get to interview company CEOs, money managers, gurus in the business, because I value opinion, track record, personality, and character over everything else. And so running a YouTube channel where all I get to do is interview people complements my investment strategy beautifully, because I get to know many people in the business as a result. And and that's spun out of a conference business that I've run for about a decade. We used to do, pre-COVID days, we did this on stage, and maybe one day we will again. But in the interim, I publish a weekly newsletter. I publish about 4 videos per week where I sit down with anybody who can speak intelligently on a sector that I'm sort of interested in right now, whether that's commodities, health science, crypto, anything like that.
Thanks, Jay. And Jay, just going a little bit deeper in terms of, okay, you run Cambridge House, and I think it was your father that kind of owned that before. So you kind of continued the legacy. Is that it?
Yeah, that's right. That's right. It's so quasi family business at one point, and then in 2000, so from the mid 90s, that's when my old man Joe Martin started running conferences focused initially on investing in the diamond sector in like the mid 90s. And he was a journalist and moved out west. He's from Saskatchewan. Small town, grew up on a farm, and went, was a journalist. And, he moved to Vancouver in late 80s, early 90s as a business journalist. Inevitably, you end up writing about the commodity sector because it's kind of the birthplace of mineral exploration. And so that's how he got his fingers out of that business, and found a niche running events for junior mining companies that were looking to connect with investors, retail investors and junior mining public companies, both of which Vancouver, Canada had plenty. My brother and I actually took over the business in 2010. He's since moved on. My brother's since moved on to do other things, but since then, I successfully exited my old man, and he's now living the good life on Vancouver Island. And we've been running conferences ever since. We've expanded into a variety of new industries. We started with tech. We went into the tech space in Toronto a couple of years after I took over, maybe 2012. And then that led us into the cannabis sector, and then into the drone industry, and a variety of sort of ancillary conferences, both in the consumer and the investment sectors.
Thanks for kind of sharing that information and kind of like the history and the background. That's so neat to hear, and it's kind of interesting to hear how you guys are continuing to kind of pass along that torch, right, and keep it going. Every investor, has a story, right? And whether that's they're new into investing, like they're kind of on the edge, they're kind of itching, like they're not sure to get into it. And then there's also people that are already there, they're kind of learning every day, they're doing their due diligence. But when it comes to you, Jay, what is your story? How did you get into investing? If you could just share a little bit of that with our viewers.
Yeah, it's a good question, Ben. And at a high level, I think it comes from a mindset that believes with a lot of conviction that we have to be as sovereign as possible, meaning that it's up to us individually to take control of our lives, and that means your financial health as well, right? And all that to say, relying on a salary or an income, I just don't believe will ever be enough to truly get the freedom that you want. But I self-identified as an entrepreneur prior to identifying as an investor. I used to work in the tourism business. Actually owned a whitewater rafting company for a handful of years up in the Rockies prior to moving down to Vancouver and taking over Cambridge House. And my identity was that of an entrepreneur, right? I knew how to build products and get them out to market. I knew how to tell a story, and I knew how to onboard a team into a corporate culture that created, inspiration and motivation in a fun environment. And I think that led to a lot of the success I had in business. But I still remember pretty distinctly a conversation I had with this kind of like mentor of mine on House Street. And we were just, spitballing, and it was probably like 2014 or so. And we were just chatting through various business ideas and all this stuff. And, then he just stopped me point blank and said, okay, but what are you doing with your profits? And, my answer was like, oh, I reinvest everything back into the business, like 100%. It's that not my only investment, but at that point it was by a country mile. My largest investment was my business. And yeah, he just said, nobody gets rich off of salaries, Jay. You get rich off of capital gains, right? And it's a very simple statement, and one that you could take any direction. But I remember how hard it hit me, thinking like, yeah, you're missing the boat here. Like in addition, in the industry that I work in, I had the opportunity to generate really significant deal flow. And so once I turned my attention, or I guess my understanding of my business, we ran conferences in all sorts of industries, but to be honest, the most fun were those in the investment sector, specifically my technology conference in Toronto that we then brought to Vancouver. And it was the most fun to create the content, the most fun to do diligence on the clients as they appeared on the trade show floor. And when I thought about my business different from, a conference company, and started thinking about it in the sense that it was a deal flow machine for me, that's when everything changed. And that's when my portfolio became my core focus. And everything else I did, including Cambridge House, had to serve that need, which was to supply my portfolio with greater and better deal flow.
Why is investing so important, to someone that's currently an investor, or even someone that is, kind of new? Now, I know you kind of touched upon it in terms of, keeping that capital and keeping those gains going, and not having just that primary income, having, more incomes than one. But yeah, if you could just expand on why it's so important.
Right. I think about it like, I never think about financial independence. Or that's a topic that people discuss a lot: financial independence. Everybody wants financial independence, financial freedom, and all of this. And I think about it a bit differently. I think about it in terms of financial confidence. And what that means to me is your ability to handle a crisis, right? In the same way you would think about, maybe physical confidence, right? Can you handle a crisis, right? If it were to come, and you'd like to be able to say yes to that question. I feel like I'm good, right? I can handle myself. And you should think about your financial confidence the same way, meaning that, whatever black swan event you could get hit with, are you prepared to deal with that, right? And that changes as you go through life. If you're sort of single, footloose, and free, you can be quite lean and mean and still get out ahead. I got 3 kids, a mortgage, all that stuff. And so now I think about that differently. And I like to have a sizable war chest to be able to weather a significant storm. What COVID did for a lot of people, I think, is rocked that sense of stability, right? And exposed a lot of people to their vulnerabilities about, income can be disrupted, savings can be depleted, right? And if that happens, or if that happened to me, how well off was I? How prepared was I? And so, to simplify it, The reason everybody should focus on investing in some capacity, whether it's your core focus, half your focus, 5% of your focus, is because it'll give you a more thorough understanding of how money works. Inevitably, when you apply pressure to anything or attention to anything, you improve it, right? What you measure, you improve in life every single time. And so if you're just focusing on allocating a small piece of cash every month to a ETF or mutual fund, you'll see that grow. But if you want to get really aggressive, you can, get more into it. But essentially, it's about taking control. That's what it is to me, Ben. It's about taking control, understanding that no one has your back, unfortunately or fortunately. It's up to you. And I guess, as much responsibility as you want to take for those around you, but taking control of your finances, I think, is as important as taking control of your health and understanding that you're the one in the driver's seat. No one's got your back. No one's going to look out for you. And that's not cruel. It's the truth. It's the pragmatic approach, I believe. And so, I harp financial education and independence and sovereignty all day long. I think it's very, very important.
I really like how you compared it to like your fiscal stance and that kind of protection. And I totally agree with you. I totally think that is so important. But now looking at the importance of investing, why we do it. Like the next step is people don't even know where to start, or they don't even know what are different types of investments, or they've heard words such as, bonds or mutual funds or all these different things. And it can get overwhelming for some people. It can get overwhelming of where do I put my money? What do I do? Who do I trust? Do I go to my buddy who's good at financing, right? And next thing you know, it's kind of like you said, right? It's getting that own independence. No one's got your back except for yourself. So would you be able to explain more and kind of touch upon those? Like it's kind of known as like the investment risk ladder. So knowing like the different types of ways that we can invest, go through like the differences?
Yeah, I mean, I can share my experience there. And I think the first thing to understand is that there's no hard, fast rules that apply to everybody, and there's no correct path, right? It is truly unique for everybody because everybody has a different risk tolerance. Everybody has a different time horizon and goal. Everybody has a different amount of capital they can afford to allocate and different consistency that they can do that, right? And so by far, the most important thing everybody can do is start, right? That's the most important thing. You're going to start, you're going to make mistakes, but if you start, you'll get past those mistakes faster. And so whatever you're looking to do, no matter what the goals are, the time horizon, the wealth you have to play with, the most important thing everybody can do is start. And then before you get into like, do I want to look at ultra conservative bets, or do I want to look at the high risk market, whatever that is, like, that's for you to decide. And there's a lot to make that decision. But what I would say is it starts with habits. That's the most important thing. More important than understanding bonds versus the money market versus equities. It starts with habits. And all I mean by that is that investing, it's not a quick flip, like you need to develop a consistent habit of time investment into your financial well-being in order to be successful. And you need to be really clear, or at least have some idea about how much time you can allocate with consistency. Like that's the most important thing. I think, we're somewhat subject to a culture now where you flip on Instagram and everybody's a day trader and everybody celebrates their wins, right? It's conspicuously quiet about their losses, but like that's the nature of social media. So, but it's not easy, right? And it shouldn't be observed sort of flippantly, right? And so number one that I always tell everyone is like, how much time of your day or of your week or of your month can you allocate towards understanding your financial path, right? And once you've ironed that out, and for me, it's the morning, right? I don't have much time to look at the market after like 8 a.m., to be honest. And so any trades I'm going to make, any decisions I'm going to make, usually, I'm at my desk at 5 a.m., 6 to 8, I'm in the market, and then I'm done for the day, right? And if my kids are up all night and I sleep in, like I miss that day, right? I don't have other time that I can allocate, but that's my time, and I'm there with consistency. During that time, that's when I'm sourcing information. So I'm going through the gurus that I trust, whose opinions I feel validated by, or that conflict with my own to get contrasting devil's advocate opinions. But I'm identifying sectors where I think there's opportunity, whether that's commodities or health science or whatever, and understanding it as best I can, right? And that's what that time's for. And then, step two is identify the targets in that, right? And so, if you've put the time aside to study and learn, and you understand the sector where you believe there's opportunity, then I start shortlisting my targets, right? And And I'll usually come up with like, I don't know, 10, 15, depending on what the industry is, right? From then, once I have an idea of where the opportunity is and why I'm excited about it, determine how much capital I have to allocate, right? And map that out. And then I put my bids in the market. And if I get hit, I get hit, right? But that's kind of my process. Um, in terms of like the risk ladder, again, it's different for everybody. And you know how I guess like hedge my risk is I'm super aggressive in the small cap sector, the early stage sector. And I peel my profits out with aggression. I'm very quick to take profits, and especially take my principal out of an investment is, very quickly. And that usually goes into a hard asset for me. And that's my risk ladder. Like I'm active in the spec market, but as soon as I take cash off the table, I want it to go in that war chest. We talked about your financial confidence mechanism. Like what's that war chest? And for me, it's anything from physical gold, silver. I actually bought Bitcoin in there. I know people will debate that all day long because it's so volatile, but I have my reasons. My principal residence, pay the mortgage down, own it free and clear. And so I tend to just stick to what I know, and I don't get wrapped up in things I don't. And it's super important for investors to understand what kind of investor you are and not try to be every kind, right? I'm not a day trader. I don't try to be a day trader, right? I know the spec market. That's where I make my money. And I have probably 3 assets that I store, 4 if you include cash. I do hold a lot of cash, but I'm typically precious metals, cryptocurrencies, real estate, and cash. But I generate the cash in the spec market and I protect it in those 4 asset classes. And that's my personal risk ladder, Ben.
Everyone's approach is going to be different, and they have to be comfortable with the decision that they want to take, in terms of risk, right? So it's good that you kind of just stated there, it's not one kind of solution fits all, right? So everyone, doing their own due diligence, knowing their risks. So that actually kind of leads into my next question, which is how can someone invest sensible, suitable, and then as well as simple?
I think what I'd say about that is if you're really fresh and you're trying to understand what your risk tolerance is and understand what your time horizon is and how much cash you can or should allocate, a great thing to do is seek out a mentor. And it doesn't have to be somebody you know personally. I mean, these days, everybody has a podcast or a newsletter or a video show. And you get these like pseudo mentors as a consequence, right? And it's fantastic because if you're trying to reach somebody like Rick Rule, but he's not taking your calls or you don't know him, like Rick's doing media every day, right? He's doing my show. He's probably going to do your show. Like Rick's everywhere, right? And he loves to mentor and bring up the next generation of investors. So find somebody like that who resonates with you, who they speak a language, and that's as simple. Like when they speak, it hits you and you're like, I get it. I want to follow this person. That creates that keenness and that thirst for learning, which comes back to that consistent habit of education, which is the most important thing. So find that mentor that triggers that in you, right? You relate to them, right? We all know these people, right? If you authors, podcast hosts, whoever, right? And so find that individual in the investment space, right? And they'll open you up to what their philosophy is. Maybe Rick Rule and he's all early stage junior mining, or maybe you'll find somebody like Raoul Pal, who's a macro investor, and he'll talk to you about bigger picture trends and incredibly smart and usually correct. And I follow him religiously. But I have my handful of mentors. And I don't need to know them personally. Many I do, but I don't need to because of how active they are creating content these days. And it's such a unique opportunity for investors to really get in the boardroom with some of these gurus and legends in the business. And from there, you can start following their philosophy and their strategy and say, this individual who I have known to appreciate their perspective, and I feel like I know them now because I listen to them every week on their podcast. We've got this quasi relationship. Now I'm going to start actioning some of the stuff they're doing, right? And dip your toe in the water that way. And you'll learn if this is the strategy for you, if you like the results you're getting, if you're enjoying the work that's required to move forward. And then, because I keep on coming back to this, but you have to find the strategy that you can consistently execute, right? Like I said, it's not, you put the money in today and you're good. Like I don't personally buy that approach. That exists for sure. Maybe just chuck it into a fund and hope for the best and hope for the fees don't kill you and all this. But, I like to take control. If you look at my portfolio, it's very much one of control, right? I control the spec markets because I do all my own diligence. I invest in deals, I negotiate terms. And then when it comes to peeling out profits and putting them somewhere protective, it's my principal residence or it's generally speaking, off-grid assets, right? I just like that approach, right? I like to have full control and full management of my wealth, but that's just me. So find that guru, and that's how I'd say dip your toe in. And as you evolve and grow as an investor, you'll outgrow that mentor. It's the best part. You'll find somebody better, more aggressive, less aggressive, whatever that is, right? And just like as you grow through anything you're learning, you'll grow through your financial education as well. But pick off one or two individuals, two or three individuals, and start there. But I would just say find somebody who resonates with you and you enjoy listening to, because it's got to be enjoyable. You won't do it.
Yeah, absolutely. And you know what? That makes a lot of sense. Finding that mentor or list of mentors, right, who are obviously gonna make you believe. It will actually make you trust your decision that you're about to do, right? And then I guess over time get more comfortable that as you kind of follow the story, if that is what you believe, then you can slowly take more risks if you're feeling comfortable and if you believe in it. And if you're, like you said, if you're so aware of what you're even investing in and doing your own due diligence and doing your daily research or your weekly research and always being on it. So I love how you spoke about mentorship, and I also love how you spoke about habits, because that's definitely super important for investing. The same way that it is for our physical health, right? Like we got to put it in every day. It's not just once a week. You got to be consistent, right? So I love that, and I appreciate that. And another thing too that kind of brought to my attention while you were speaking, Jay, is it's very tempting for people. Oh, you know what? There's this thing called Wealthsimple, or there's this app called Robinhood, and although there's algorithms and those things, like these different applications can work and can benefit. You're not getting that continuously learning, right? You don't really know what's going on in your investments, and kind of like you said, you really want to make sure that you have that security, that groundedness, and that full control of what you're doing, of all your decisions. So the next question I have here, we kind of heard of about Cambridge House International. You spoke about that a bit at the beginning. If people want to know more about what is this, can you give us more details of it?
Yeah, 100%. So what Cambridge House has become, Ben, is really a platform where I can do all my diligence publicly. And that's to say that I'm a retail investor first. And I understand, the most effective path to reach my personal wealth goals are through the capital markets, right? So that's where I live and that's what I do. At Cambridge House, I do so when I talk about, the education, connecting with your mentors, following their content, learning from them, applying the lessons to unique opportunities that interest you, I do all that publicly now. And so if I'm connecting with the macro investor who I need to catch up with because I feel like I've got some blind spots, and why, what am I missing in the crypto trend right now, right? What are the legs to this trade, right? What am I missing in the gold trade right now, and all this stuff? I'll call in those experts, those gurus and mentors that I look up to. I'll have them on the show and have the one-on-one conversation. And that's what you get at Cambridge House. Essentially, you get access to my diligence process, right? Because then I take, if I get excited about an idea, like an investment idea, first thing I'll do is, I'll do two things. First, I'll shortlist the entrepreneurs in the space that I have the most confidence in, that I think are the winners, right? Like I said, I'm very people driven. And I'll shortlist them first and say, if I'm going to make a bet in the copper space, right? There's maybe 4 CEOs that I think are the winners. There's maybe 6 money managers who have consistently been correct. So find out what they're doing first, right? What companies are those entrepreneurs running? What companies have those money managers already put cash in? Where's my vote of confidence from somebody who's been there and done it before with consistent success, right? And that's how I shortlist the opportunities. But secondly, I want to stress test my investment thesis against the macro trends that could support or disprove my bullish sentiment, right? Because we all have blind spots, and I've got plenty. And so I'll sit down with the macro investment gurus or maybe just the copper experts who can say, yeah, you're bang on to be bullish on copper, but you're 7 years too early, and here's why. And so it'll poke holes in the thesis and either temper or, encourage my enthusiasm depending on what I hear. And so that's all. And then I action that, right? Then I'm in the market actioning or not that advice, depending on what I've learned. And so what my audience gets is they get to come along for the ride. If I get excited about renewable energy, they're going to hear a lot about renewable energy, right? If I'm excited about health science, then they're going to hear a lot about health science because my content directly reflects my portfolio. And so Cambridge House is largely that, Ben. It's a place where my audience now, they get to come along for the ride. It's super fun because, often I'll do streams and we can kind of, do Q&As in the live chat and do diligence together on companies that I'm looking at or curious about, trends that I'm curious about or looking at, and all that stuff. So that's what happens on the channel, on the YouTube channel. And then my newsletter is a bit more granular, where I talk about specific deals that I'm in, bets that I've made recently, places that have allocated capital, trends I'm watching but haven't found an opportunity yet, and a bit of storytelling, right? I try to pull up analogies and provide a bit of education as well into the lessons that I've learned, investing in this space for a decade. And that's the gist of it. I'm J Martin BC on every social media platform, I think, and we share all of our content that way.
Okay, so then Jay, just checking in again with Cambridge here. You say you have all this content out there. People are going to be checking it out. But in terms of, we have you right now one-on-one. There's going to be all this content on all the sectors that you believe in. But what are the sectors, like we're talking about 2021 right now, what do you think are 3 top sectors that are going to perform this year?
So if you look at my portfolio, you'd be led to believe I'm all in on commodities, right? I'm I'm full up on gold juniors, silver juniors, copper juniors right now. Small handful of royalty companies, and my exposure to commodities right now definitely dominates my portfolio. So I'm making that bet, right? If I look at the macro trends, I've never seen them so favorable as they are right now, whether you're looking at whatever angle of a vaccine-led recovery and economic boost, whether you're looking at the hundreds of billions of dollars that Biden's going to push towards transitioning the US towards renewable energy, and the rest of the world is following suit. These things take dramatic amounts of minerals that we don't have yet. So whenever you massively inflate demand for anything and the supply takes years to catch up, that's an opportunity. Just the gold silver market in itself, you're just looking at currency debasement and declining confidence in fiat currencies. That's enough, possibly, right? So I'm right there. And I think that, not just the supply and demand economics, but the industry itself is better looking than I've ever seen it. And that's to say that the balance sheets are healthier, the management teams are more competent, the G&A isn't nearly as frivolous as it has been in the past. I'm not saying it's not going to get there again. Trust me, if we have another couple of years like last spring where any company could finance, we'll get back there. You'll know it when you see it, right? CEOs get more flamboyant. There's more promotes. I used to joke, maybe one day we'll get back to in-person meetings, but you can tell the health of the market by the number of flashy socks on a trade show floor, and that'll increase as the peacock promoters come out. But for now, it's a remarkably disciplined and undervalued industry. So I'm very bullish commodities. And not the off radar, but the next sector I'm most excited about is definitely health science. And I still think health science will be the biggest bull market of my lifetime. And I say that because, first of all, the world is your market. Who doesn't? When I talk about health science, I mean the medicines, therapies, and functional practices that allow us to feel better, right? Feel younger, age better, think faster, right? Who doesn't want these benefits? And whether you're looking at functional medicine therapies, wearable measuring devices, all of this stuff is just becoming more accessible and more affordable. And COVID actually accelerated a lot of this stuff. Specifically, wearable technologies have really gotten a boost. It's one of those trends that was seeing consistent and healthy growth for many years, and now we're seeing the flashpoint where things are really going to take off. Because there's been a lot of fascinating case studies that you can read about right now. Things that I'm watching, like Apple Watch, for example, is known as like a fitness tracker and helps track your sleep and nutrition and all this stuff. It also tracks this thing called heart rate variability, which is the sort of the change between an increase and decrease in heart rate, right? And this is an indicator of COVID or most flus way before you can detect it with a normal COVID test. And so, people are more inclined now to understand their health, and things like this pandemic are going to keep us, I think, a lot more keen to know how we're doing and be able to detect things faster. But commodities, I'm all in. Health science, I think, is next up to bats, and I'm just doing diligence on a handful of verticals right now. I haven't found that opportunity just yet.
And what would be your third sector?
My third sector. My third sector. Well, okay, so yeah, good question. I mean, I this year, so we're talking 2021. It's crypto, and I spent a lot of 2020 buying Bitcoin. And this is a different strategy for me because I'm usually quite aggressive in the spec markets, whereas I dollar cost average into crypto because I don't want to trade it. I don't want to be worried about the price volatility. I understand it's dramatic and I don't want to be losing sleep over that. So I built my rules for crypto and I play by those rules, right? And so this strategy is largely stolen from a few individuals. So last winter and spring, on the show, I had a handful of macro investors that I really respect. People like Lynn Alden, Raoul Pal, and across the board, everybody I talked to was allocating some capital towards Bitcoin, right? And that's all I have to see from a sentiment standpoint. We're talking like, January, February, March through to May. I saw a tidal wave of money coming because of the macro investors that I was talking to. Everybody was saying, I don't care what it is, but have a non-zero position in Bitcoin. Okay, so that's what I did. I started investing in Bitcoin because I could see the tidal wave of money and sentiment was all I needed to see, right? It obviously ended up being a great trade. Those same individuals now have the same bullish sentiment on Ethereum, right? If you look at it from a chart standpoint, it looks very similar to Bitcoin several years ago. And so I'm no longer buying Bitcoin, but I'm not selling it. I am dollar cost averaging in the same way I was to Bitcoin into Ethereum. And I expect to continue that trade for 2021 with a keen eye on what those same personalities are doing, because for individuals like Raoul Pal, it's a 1-year trade, right? His cash is going towards crypto for most of this year. He expects to pivot into emerging markets towards 2022. And so for my passive crypto strategy, I'll be keeping tabs on what those individuals are doing and adjusting my strategy accordingly.
After hearing like these 3 top picks for 2021, now an investor is obviously going to do the research and kind of find out more about it. But, what would an investor, need to take in mind in terms of rules if they want to invest into the natural resources? Because it seems clear that you're bullish on all 3. It did sound a little bit more to the natural resources. So in terms of that, what would be some rules that you think they should follow to get a better understanding before investing?
What I would tell people is I have a people-driven approach for what I think are some very valid reasons, right? There's so many variables in the junior mining, resource sector. And, if you're looking at, first of all, a lot of these companies, they don't have anything. They're just raising money to explore for something that may or may not be there and most likely isn't. Right. That alone is like a crazy business plan. Like, why would you ever invest in that? Right. We do because the potential upside is so dramatic. Right. Secondly, you got to be very careful about jurisdiction. Right. Costs can get away in you. Like, there's all sorts of things that can occur. And so what I like to have confidence in is the captain of the ship. Right. I want someone else. I'm not a geologist. I'm not a technical investor. I'm a people-driven, sentiment-focused investor. And so I will lose sleep over finding the right people. And I want them to lose sleep over finding the right geology in the right jurisdiction and getting a project underway under cost. And so, they say bet the jockey in the junior mining sector, but it's thrown around flippantly, like, oh, just bet that, it's all about people. And, it doesn't matter who you talk to. Rick Rule, Doug Casey, Marion Katusa, Adrian Day, all these individuals will tell you it's all about the people. But, we can take these analogies and kind of understand them and be like, yeah, no, I'm all about the people, but I invested in this company, that company for these reasons. To actually be focused on the individuals means knowing their resumes and track records and why, for example, why Ivan Bebek gets my money every single time, right? Like, there's an entrepreneur in the business. I think, if we're trying to find Ian Telford 20 years earlier, that's our goal. We say investing in the people, right? We're trying to find those individuals who will only chase the best business opportunities, not throw good money after bad. They're going to surround themselves with other brilliant individuals. They're going to have a plan C because plan A and B are going to fail, without question. And they'll have the resilience and the wherewithal to hunt down that plan C and be a fantastic steward of your capital. Because when you hand over that check, some CEO is going to have an adventure with your money and you better trust them, right? And so I get back to that every single time. That's why I will defend my people over everything thesis to anybody, because you can't be an expert in everything, right? And if health science looks ripe, I want to be there. If gold looks ripe, I want to be there. Same with lithium, copper, whatever. My common denominator is the entrepreneur, right? That's mine. And so that's my rule, and I don't break it. And when I do, I regret it. Creating rules is the easy part. Following them is the hard part, right? We know that, right? And that comes to when to buy, what to buy, when to sell, and how to sell. It's all included in there. But if I were just to share one rule with you that I'm a stickler for, it's that. It's who.
It makes sense. And I like your analogy there, the captain of like the ship or the boat, kind of like what we were saying before, even when it comes to our own self, right? Making those decisions that we're doing. Well, same thing in that leadership, right? We want them making the decisions that whether it is a bull market or whether it's not, that they're going to perform. You interview a lot of the smartest investors. We've spoken a little bit about today of, finding that mentorship and how important that is. When you know who your mentors are and following everything, it's important to have mentors that are going to be winners for you. So if I go to my next question, it's, if we think about, you're from Canada, I'm from Canada, we love hockey, right? So if you're building, your starting lineup for an all-star game, and now we're applying this to the mining sector, right? Because that was one of the sectors that you were really bullish on for 2021. Who would your list be of your top line for this hockey team of mining that you would recommend right now to people to follow?
Yeah, it's a great question. I'll do my best to compartmentalize a little bit. And so I mentioned two macro um, finance analysts that I really respect. One is Lynn Alden, and the other is Raoul Pal. And the reason I mentioned them first is because I like being a contrarian, but I like to be there just before the tailwind, right? I don't want to be 10 years early. If I can, I'd prefer to be 1 year early, right? And so understanding the macro trends are step one. And within that, if I were to only pick two personalities, I would pick Raoul Pal, co-founder of Real Vision Television and the author of Global Macro Investor, and Lynn Alden, who's kind of a newcomer on the scene as of like 18 months ago. And she's one of the smartest individuals in the business, a complete monster. So I've had Lynn on the show a few times. She's a genius, and I recommend those two individuals. Coincidentally, they are both pointing to a commodities secular bull market. So then we drop into the commodity sector, and where do we want to look first? So let's start with the money, right? And there's a handful of directions you could go with this, but I do pay a lot of attention to Rick Rule, right? He's been in the business a very long time. He's incredibly patient. He's ridden through four, pretty aggressive bull bear cycles. You want to trust somebody. You want to follow somebody who's got battle scars and who's made horrible mistakes, right? And who's lost sleep over having their own capital in the business. And we were just talking before you hit record about it's easy to read the lessons of, oh yeah, I have conviction in my idea and I understand there's going to be some pullbacks along the way. And don't worry, I've got the diamond hands, as they say. I'll hold tight and ride the storm. But actually doing that's a different story. When it's your cash on the table and you're down 30% and you start questioning your conviction, you're like, shit, what have I done here, right? So before anyone's managing someone else's money, they should have lost sleep over losing their own money. And so Rick's one of those individuals who started with nothing, built his own portfolio, and now he's one of the most respected money managers in the business. So I do care what somebody like Rick is doing. Outside of that, I think another money manager I respect is Adrian Day. He's brilliant. He's a bit more off the radar. Doesn't do nearly as much media as Rick does. And so a lot of people don't follow Adrian, but Adrian's brilliant. And one of the few institutional money managers who's quite aggressive in the small cap space. So that makes him a bit unique. Him and Frank Holmes are kind of the two institutional money managers that are consistently aggressive in small cap junior mining. The reason I would point to Adrian first is because he's more hands-on, right? Frank Holmes is brilliant, runs US Global Investors, but he's got a money manager that handles the junior mining portfolio, Ralph something, and he's brilliant, but Adrian's got his finger on the pulse. So I would look at Rick Rule and Adrian Day and where they're putting capital. And that may point me to a handful of companies that are led by different entrepreneurs. And then I can start looking at their resumes to determine, okay, now I've got the 10 entrepreneurs that these two individuals have put cash into, who do I really feel confident in? If I can only pick three, right, or two or something like that. And so I mentioned Ivan Bebek, and he'd without question be my top pick. And I'd point to a guy like Ivan because, he's got two successful exits in horrible markets, Keegan Resources and Caden Resources, 500% returns for shareholders, and he's never had a tailwind. Thing about him is that he's got two great exits behind him, and he still operates like somebody who's got something to prove. He's got a massive chip on his shoulder. He wakes up like he's pissed off and he hasn't done anything yet. And I love to bet on that, right? Because he still feels like he hasn't proven himself yet. And so he's very hungry. And now with a tailwind behind him, I'm very aggressive I'm very bullish on Ivan Bebek. Another is Amir Adnani, very, very smart entrepreneur in the business. Gold Royalty Corp, gold mining, uranium royalty corp, UEC. He's got his fingers in a few different businesses. And Amir is one of the most strategic and aggressive entrepreneurs in the business. And if you look through either of those two entrepreneur shareholder base, you're going to see some familiar names. You'll see Marion Gattusa each time. You'll see Rick Rule each time. You'll see Ross Beatty each time, right? There's a reason these individuals attract the smartest capital in the business, right? It's because they have a track record of doing it and doing it again. And so when you invest in Ivan or Amir, you're not buying 5-cent paper, right? And somebody who's new to the space might say, well, wouldn't it be easier to get a double on a 5-cent stock than a dollar stock? And it's like, well, not really, actually it isn't, and I get that mentality, but, that 5-cent stock will probably spend some marketing dollars, run to 13, then the marketing budget runs out. You're sitting back at 4 cents and you've just gone for the round trip and you're back where you started, right? So you can throw a dart, maybe you'll get it right. But, I don't appreciate that strategy as much as I like to bet on, success begets success, right? It lowers their cost of capital, increases the opportunities available to them, and builds my confidence. So those are a few names that stand out to me.
That's good, team. Thanks for sharing that. If there was 3 stocks that you have in mind that you think our viewers would want to hear about.
Yeah. So, one of them is a company called Tier 1 Silver, and they're just listing right now. I'm a shareholder. And it's one of Ivan Bebek's spin-out companies from his previous company, Orin Resources. So viewers might be familiar with Orin Resources as a sort of polymetallic company that had copper assets, silver assets, and gold assets. And last spring, Ivan decided to split them into 3 different companies: Tier 1, which holds the silver assets, Fury, which holds the gold assets, and Sombrero, which will list at some point in the spring, which holds the copper assets. And it was a smart idea because retail investors like to see a clear path to profits. And if you have a company that's holding copper, silver, and gold, it's less clear how the share price will perform in relation to the underlying commodities. Whereas now it's quite streamlined, and Tier 1 will perform in addition to its drill results and the deposit itself, it'll perform in relation to the silver price. And so it gives investors a clearer picture. And so, those are 3 that I think investors should watch, right? Fury Gold was the first listing. They've been public. Tier 1 is just listing shortly. And then Sombrero is the copper company they'll be listing probably in April or May. And so those are 3. I think they're a good bet. I think the deposits are all in good jurisdictions. I think they've got to do some work to prove they're as valuable as they say they are. But I'm betting on the management team and the leadership, and I've got a lot of confidence in that. So the real test here is that Ivan's a very accomplished CEO. This is the first time he's appointed other CEOs. He's now the chairman of Fury Gold and the chairman of Tier 1, and he's appointed CEOs to run those companies. He'll be the CEO of Sombrero. And so that's the new risk factor there that I'll have to wait and see. But like I said, I've invested, I'm a shareholder, and I'm on board. Those would be 3 companies I would watch. There's a newish company called Eris Gold, which is like the 3rd coming of maybe the greatest all-star team in the history of junior mining. I shouldn't say junior mining because these are individuals like Frank Justra, Ian Telfer, Neil Whittier, who have recently spun out Caldas Gold into Eris Gold, Colombian gold project. But the money and the management behind that company is something that investors only get to participate in about once per decade. And they've got that opportunity now. It's trading at about $2. Very unique opportunity. So another one I'd call out there.
All right. Well, thanks, Jay, because that also touches, on three different commodities in one there. So I appreciate that. Is there anything else that you want to say or anything else that you want to add?
No, other than Ben, I love that you're doing this podcast. Like I said, I think it's so important that people pay attention to their financial health and have a strategy in place, no matter how aggressive or passive it is. I just think that it's maybe the most important thing you can do after taking care of your health is taking care of your wealth and understanding that no one's going to do it for you, and that pension is not enough, and that EI is not enough. And so take control. Put it in your own hands, educate yourself, understand that it's up to you. And most people aren't going to do that. So by just taking those steps alone, you'll come out on top.
That's awesome, Jay. And I want to thank you for being on the show today and being so generous with your time. Where can people find you? I know we've already talked about Cambridge House on YouTube. I know you also said like the Twitter, but if you could just say that again, so then everyone knows, okay, where we can find you.
Yeah, I'm Jay Martin BC, JayMartin BC on every social media platform. And a lot of my writing is published on cambridgehouse.com, or you can just search Cambridge House on YouTube and we'll pop up there and you'll see us publishing about 4 videos per week.
Awesome, Jay. Thanks again for today.
My pleasure, Ben. Thank you.
This podcast is for informational purposes only and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos.